Hello and welcome. Every once in a while, a financial self-help book comes along that pushes open hidden doors to new ideas and approaches to money management. Here is one of those special books, Above Average Investing for the Average Investor. This thoughtful yet humorous take on Wall Street breaks free of traditional investment advice. It speaks frankly to amateur investors about why stock experts are usually wrong and how they can do just as well on their own. Joining us today is the author, financial expert, Steve Peasley. Steve is a registered investment advisor and president of KPP Financial, which has more than 60 years of combined trading and money management experience. He's also the host of a financial radio talk show called Invest Talk. Steve, thanks for being with us.
Well, I appreciate you having me. I wrote this book, Above Average Investing for the Average Investor, not as an expert, but as a student of the stock market. It will not make you rich quick. It'll get you there, but I don't believe in any get-rich-quick schemes. They don't exist. However, it will give you a good base of understanding the stock market.
Most of our viewers who invested in stocks have lost a lot of money over the past year. Why do you advise them to buy now?
Usually in the depth of the recession, at the worst part of a recession, when the economy is at its worst, the stock market begins to rally because investors always look forward, not backward, forward 6 months down the road, 9 months down the road. So that's when you want to buy. You want to buy when there's maximum fear out there in the market.
Well, you write about how emotions, not logic, control the stock market. Most serious investors have heard the phrase, buy into fear and sell into greed. But how do you follow that advice when you have no idea where the bottom of the market will be?
In the depth of recession, we have maximum fear in the market. The market has sold off tremendously. That's usually the best buying opportunity when stocks are very underpriced. Fear has gripped everybody. That's when you want to be a buyer of stocks.
Well, Steve, do you have any advice on how investors can control their own emotional responses when trading equities?
Well, emotions are tricky, but there are methods you can use, as pointed out in the book, to control your fear and greed in the stock market.
You also write about buy signals, and one that caught my attention was looking for double and triple bottoms. Tell us a little bit about what that means and when to buy those stocks.
A chart of a stock, as it comes down off a high, hits a bottom, and then bounces off, then comes back to that same bottom, is called a double bottom. When it bounces off that second time, that's when you buy it. Or a triple bottom, does it 3 times. That means it's finding support at a certain price and probably won't go below that price. That is the time you buy a stock.
Well, what's the difference between a low-price stock and a cheap stock, and why is that important?
The price of a stock is a function of earnings, okay? Whether it's cheap or expensive depends on how much earnings it has. For instance, you can have a stock selling for $1 a share, but if it has no earnings, it's going to go out of business. It's very expensive at $1 a share. You can have another stock selling at $100 a share, but has tons of earnings and is growing very fast. More and more money earning all the time for the next few years. It could be cheap at $100 a share. Price has nothing to do with whether a stock is cheap or expensive.
Now, one section of your book refers to the recession method, or how to place a price target on a stock during a recession. That seems particularly appropriate for today's market. What can you tell us about that?
Now, sometimes there's good stocks in a recession that don't earn money. Well, how do you find those stocks? How do you know when to buy them? Well, instead of looking at earnings, you can look at the relationship between the price of the stock and the sales of the company, how much sales they're doing. There's a relationship. They're called the price-to-sales relationship, PS. I point out what those numbers should be in the book, and we like to buy stocks with a price-sales ratio of 2 or less.
All right, Steve, to wrap things up, do you have any closing words of wisdom for our viewers?
But I believe if you have an interest, if a person has an interest in making money in the stock market, they don't need to hire experts. They just need to learn how it works. What do the professionals do, and understand how they work. Once you have that, then you can actually beat them at their own game. So I do believe both the radio show and the book are just for the average person to help them make better financial decisions.
That's good advice in any economic climate. Steve, thank you for all of this, and good luck with your new book. Once again, it's called Above Average Investing for the Average Investor. And you can purchase a copy at www.investtalk.com. Thank you for being with us.